Hi, Pam Pryor here. I am Profit Concierge and CFO to 7, 8, and 9-figure entrepreneurs, and we're here today to talk about something that's really important in your business, and that is, how do you get paid? So come back, tune in right after this quick break. So let's talk about this how do I pay myself thing out of my business, because this is one of those things that we often think of way down the road in the business, because at first we're scrambling so much just to get things up and running. But basically there are 3 ways to do this. Now I'm going to put a major disclaimer here. I am a CPA, but I do not do taxes. So I'm not a tax accountant, but I do want to give you an overview as an entrepreneur of what questions to ask when it comes to this issue of paying yourself out of the business. And the other little thing I'll say about that is you don't need to worry about this throughout the year. You can usually adjust whatever needs to be adjusted with a good tax accountant at the end of the year and make sure that you are doing whatever makes the most sense. Because here's the reality. Taxes are the biggest expense in your business if you're profitable and if you're not managing them. So a lot of times we all have tax accountants who just do the compliance for us. Like come April, they file our tax returns. That's not enough once you're profitable. You don't want to have your first profitable year in business and all of a sudden go, yay, I made $100,000 after all my expenses, and then find out 3 months later you have to give $40,000 of it to the government. That's why we do tax planning. And how you pay yourself is all part of that tax planning. It's trying to minimize how much of that goes to the government so that you pay your fair share, but not more than that. Okay, so let's just talk about the 3 different ways that there are, and you can make sure that you talk to your tax accountant about which one makes the most sense to you. So the 3 ways are, you can pay yourself a salary. That's one. The second is you own the business. You can take an owner's draw. The third is you can give yourself a loan. Okay? The bottom line is, no matter which ones of those you do, you're taking money from the business and moving it to you personally so that you can pay your bills, have fun, invest whatever it is you're going to do with the money. So anytime we're making this transaction, taking money out of the business and into your personal pocket, you can do it one of these 3 ways. So what are the overall advantages and disadvantages? Well, let's talk about how they affect you really quickly. If you pull a salary, and let's say your salary is going to be $1,000. In any of these situations, we're going to hand you $1,000. What's going to happen with that $1,000? Okay? So first of all, you can pay yourself a salary. If you pay yourself a salary, the business would pay you $1,000, plus they would pay a little something in employer tax. Let's just, for purposes of this example, say $75. So the business, it would cost $1,075, okay? And you would get $1,000 minus, let's say you have a 10% income tax or a 15% income tax rate. They'd withhold 15% for the federal taxes, another 3 for your state taxes, and another 2 because you happen to be unfortunate enough to live in a city. So they're going to keep 20 of it, the government that is, and you'll see $980, okay? So right now your business has had to pay $1,075 to put $980 in your pocket. Now that's not necessarily a bad thing, and I'll tell you all the things to think about there, but that's not necessarily a bad thing, depending on where you are in your business cycle. Now one other thing you can think of doing is paying yourself as a contractor or paying a family member as a contractor. But I tend to lean away from that because it's just not always the best route to go for a whole number of other reasons, okay? Now, the other thing you can do is take an owner's draw. If you take an owner's draw, that's really simple. $1,000 leaves your bank account and $1,000 comes to you. Now, you'll be taxed on that when you file your taxes, and the government will take their share, their 20% or whatever your effective tax rate is. And so in this situation, you're only paying $1,000 to give yourself $980. So you only lose 20 bucks there in that mix. And finally, you can give yourself a loan. And depending on how this is structured, for simplicity, I'm just going to say there's no tax impact right now. You give yourself you take $1,000 out of the bank, you put $1,000 in your personal bank. So that one comes away pretty clean. Now there are a lot of ramifications around that, and you have to make sure that you write a note that's lending yourself money and that there are rules and stuff in place, and you would want to have that approved by a tax accountant or a tax lawyer. You don't just want to throw that together yourself. But the bottom line is there are 3 different ways to get money to you, and each of them cost you and the corporation something different, or your company something different. Now the thing to keep in mind is that this becomes a deductible expense, not this. This becomes a deductible expense in your business. So you get a little bit of this back when you file your business taxes or your Schedule C for your business on your own income tax if you're a sole proprietor. But you get a little bit of this back. So it doesn't quite cost you the whole difference there, because when you file your business taxes, you'll get some back. For both of these, there's no tax advantage. We're assuming this is a 0 interest loan, just for fun. Okay, so you get a little bit back here. So those are the 3 different ways to pay yourself. What you want to do is talk to your tax accountant, because there are a whole bunch of factors that affect this. In the business, it's things like, what are you? Are you a sole proprietor? Are you an LLC? Are you an S Corp? Are you, in some cases, a C Corp? And over here, it depends on things like, what is your total income for the year, including, if you're married, that of both people, right? Because that's good. What you need to know is, what is your tax rate here? That's a big question mark. So that's another piece that makes a big difference there. And the other is whether or not your business is in a profit or a loss position. Is your business making money or losing money? Now there's more factors than that, but those are the big drivers. And those are the reasons that you want to talk to a tax accountant if you're starting to be profitable, because you want to understand how to pay yourself, because it's one of the best ways to manage your tax bill. And just to circle back, your tax bill is and can be the hugest expense in your business once you become profitable, unless you start to manage it. So I hope that helped a little bit. In the meantime, the cool news is you can just move the $1,000 over into your personal account now. Talk to a tax accountant before year end, just to make sure that it's all done and managed and accounted for in a way that gives you the very best tax advantage in both your business and personal life. Hope that helped. You have a great day. Hi, I'm Pam Pryor, Profit Concierge and CFO to 7, 8, and 9-figure entrepreneurs. And I'll tell you what, there are a few things that every one of my clients that is a 7, 8, or 9-figure entrepreneur wishes they had done at the beginning of their business, either right when they started, once they started to leverage their business. And what I'm really excited about is now we're going to bring the value that I've learned from working with those entrepreneurs to every entrepreneur. We're going to have a 12-week masterclass with me. Profit Concierge Masterclass will last 12 weeks with the goal of, once and for all, unleashing the cash in your business and kickstarting that business engine. Whether you're starting with just an idea and you haven't actually done anything yet, or whether you're actually running a business that's kind of puttering along but you're ready to jack it up to the next level, or if you're a business that's really successful but you're getting a little tired of doing it all yourself and you're ready to leverage it. In any of those situations, these 12 weeks with me in the Profit Concierge CEO Mastermind are going to change everything. So here's what I want you to do. I'd love for you to go to the pamprior.com website, pamprior.com, PAMPRIOR.com. Click on the Reserve Now button. What that's going to do is reserve a quick call with me. We'll have a little half-an-hour session and decide if this makes sense for you or not. And if it doesn't, I'll definitely give you 1, 2, 3, or 4 resources and ideas that can move you forward anyway. But if this works for you, we'll make sure that we get you signed up as quickly as we can. So here's the thing, you know that wherever you are in growing your business, you need to know your numbers. We all hate to hear that. It's kind of just words. But if you need to know your numbers, why not learn what you need to know as a CEO? Not what a bookkeeper needs to know, not what a tax accountant needs to know, but what you need to know as the owner of your business. And why not learn in a 12-week mastermind with me, who's now focused on working with entrepreneurs exclusively for more than 6 years, but still have a good 20-25 years of corporate CFO business experience to bring to the table for you. Join me. Go to pampryor.com and click on Reserve Call Now. And I look forward to seeing you on the other side. Take care.